more than just business news, we're news for business people.
Good morning, you're watching Daybreak on Bloomberg Quint Live and I'm Alex Matthew. Let's first take you through the headlines this morning. The few Asian markets that are open are trading in the green, extending a global rally in stocks. Most Asian markets are shut on account of the Lunar New Year. A Bloomberg survey shows that economists are expecting the Federal Reserve to hike rates 4 and not 3 times after the passage of a $300 billion spending package in the US. India's trade deficit jumps to its widest since May 2013 as imports of crude oil, coal and precious jewelry surge. India doesn't need an electric vehicles policy, says Road Transport Minister Nitin Gadkari. Niti Aayog CEO Amitabh Kant says an action plan is being formulated instead. Well, with that, let's turn to the international markets, and US stocks rose sharply in a choppy trading session on Thursday as the major indices extended their winning streak to 5 days now. The move higher took place despite Treasury yields hitting multi-year highs. Bloomberg's Abigail Doolittle has all the updates from Wall Street in this report.
The bulls were out for a 5th day in a row on Thursday, with the Dow, S&P 500, and the Nasdaq sharply higher once again, all up more than 1%. And it was the tech-heavy Nasdaq up top also once again, up 1.6%, on pace right now for its best week since December of 2011. This is the rebound rally from those 2 weeks of intense selling pressure simply continues. Now, not surprisingly, a top sector for the day was technology, led by Apple, Microsoft, Alphabet, and Cisco. In fact, Cisco, the networking company, hit its highest level since 2000, this on a strong earnings report and a very solid outlook. Another outsized gainer on the session was Teva Pharmaceutical, this on the news that Warren Buffett's Berkshire Hathaway added a stake. Some investors may think that this means the company's ongoing turnaround plan could be successful. And there was lots of strength for the crypto-related names, including Overstock.com. This is Bitcoin crossed back above $10,000 per Bitcoin. The e-commerce company accepts Bitcoin plus has an iBank and thus is viewed by many as a proxy for cryptocurrencies. Overall, then, with stocks sharply higher, once again, there was a sense of risk on to Thursday's Wall Street session, but it's worth noting this as Haven bonds and the yen rallied as well. In New York, Abigail Doolittle, Bloomberg News.
Well, Abigail did mention that Bitcoin the Bitcoin-related company was surging, and Bitcoin, in fact, has crossed the 10,000 mark again on its way up. But let's take a look at the Asian markets, at least the ones that are currently open. The few that are open, like I mentioned earlier, are trading in the green, and that's aided by the risk-on sentiment in the US markets. Volumes will be muted today, though. Several Asian markets are shut for the Lunar New Year. Those include China, Hong Kong, Taiwan, South Korea, Malaysia, and Vietnam. Just pull up the Nikkei for our viewers here and point out that it's up 1.34%, extending the positive sentiment that you've seen globally in the equity markets. Darshan Mehta and Agam Vakil are here, though, to set us up for the day's trade and also to tell you what's happening in the futures and options space. Morning, guys. Darshan, first to you. Positive sentiment to end the week here in India.
It seems like the SGX Nifty is poised for a positive move, given the fact that global equities are doing well. So the last time we checked was up almost 30 points. So coming in close back again, the 10,600 mark. The Nifty has been very range bound over the past few days. But as far as the ADR is concerned, the seem to be on the positive side. ICICI Vedanta leading the gains. Wipro Dr. Reddy's also following suit. So clearly there is traction that's happening in the ADR. HDFC Bank and Tata Motors were the two ADRs which didn't do well in trade. Now, as far as crude is concerned, the rally continues. Overnight, a 1% gain on crude. Again, the start is positive. We are seeing that WTI is above the close to $61.50 barrel per mark, and Brent is coming in close to the $65 barrel per mark. So crude on a general has gained in close to 4.5% in the last 3 to 4 trading sessions. Now, base metals, the close was decent. As far as if you can see it, aluminium was the only one which is trading down. It was trading running down almost 0.5%. But apart from it, copper or zinc or nickel, all of them did well. Lead was the best one, trading up almost 1.5%. Now, China is shut today, so you will not have any kind of cues that will come in from the Chinese market at this point of time. So that is there, but you can see COMEX copper is trading absolutely flat. So no commodity updates from China at this point of time. Gold and silver trading with a positive bias. Platinum and palladium are trading with a negative bias currently. What happened as far as the fund flows were concerned? Yesterday was a little volatile day as far as our markets are concerned. But again, we are seeing that FIIs continue to sell. So in the month, they've sold in almost 6,500 crores in the market. And clearly, a similar amount was bought in by the DIIs. So whatever is being sold by the FIIs have been bought in by the DIIs this month. Now look at what happened yesterday. While the Nifty was positive, there was enough selling pressure in the mid caps and small cap. The small cap was down almost 1.5%. The VIX also managed to drop in trade. The VIX was down almost 5% since the Nifty was doing well. And some of the sectors which will be in focus, the Nifty Energy did well. It was up almost 0.6%, but the real estate index was down almost 1%. Now, what contributed to the Nifty? Nifty was up 44 points. Basically, some of the financial institutions like ICICI Bank and HDFC, Infosys after a while is contributing. What didn't do well? L&T, Indiabulls Housing Finance, Hero and Bharti Airtel. But Agam, it's been a very tight range. What are the FNOQs indicating?
Absolutely. The Nifty has been moving between 10,500 and 600, and we haven't seen too much movement. When it comes to the open interest in the indices for that matter, in the Nifty, we've seen a little bit of an unwinding as far as the Nifty futures go. Coming to the Nifty bank futures as well, what we are witnessing is about, well, very little change in open interest, while the index itself has moved up and gained by 0.3%. The VIX, however, has cooled off further, now down by as much as 5 below 70. In fact, now it's around 16.3, and the put call ratio also largely hangs around the same levels at around 1.13 as against 1.08, so not too much has changed there either. But in terms of changes in open interest, now what we're looking at is a little more writing in the 10,500 put, and that can serve as a near-term support as far as our own markets are concerned. Of course, we're not too far away from that mark. We're just 45 points away. But in terms of changes in the F&O band, we have GN Irrigation coming in and entering the F&O band, but we're also keeping an eye on Apollo Hospitals, which did see fresh longs, and along with Apollo Hospitals, counters like PNB, which continue to see fresh shorts building in. Of course, these are some of the counters that we are going to be keeping an eye on as we move into today's day of trade. But of course, Nifty, all eyes will continue to be on there, considering we are not going to see too much coming in from the global indices. Let's just wait and watch if this consolidation continues.
Thanks so much for that, Agam. Let's move on to a check on the rupee and the bond market now. And Saloni Dhanuka joins us with all the updates there. Saloni, the rupee strength continues.
Absolutely, Alex. Extending gains for the third straight session, the rupee yesterday advanced by 18 paise to close at 63.91 levels against the dollar on the back of sustained selling of the American currency by exporters and the banks. The local unit also got a boost from higher domestic equity market along with weakness in dollar overseas. Elsewhere, domestic wholesale price inflation eased to 2.84% in January versus an estimate of an increase of 3.2%. Speaking of the bond market, sovereign bonds declined yesterday the most in 2 weeks as yields on the new 10-year benchmark security jumped 8 basis points to 7.57% after RBI said that they are ready to inject adequate additional liquidity if required. On the global front, the dollar ended lower for the fifth straight session, and it is now hovering near 3-year lows of 88.50 levels. Now the index is on track to lose approximately 2% this week for its largest decline in nearly 9 months. Talking about other currencies, the dollar fell further against the yen yesterday to hit a fresh 15-month low of 106.02 levels, while euro and pound are poised to gain nearly 2% this week. Well, coming back home, dollar rupee is trading flat in the non-deliverable forward market, which indicates a flat opening for Indian rupee in today's trade, Alex.
Thanks so much for that, Saloni. Let's take a check on the economy now. And there was a major update that came in yesterday. India's trade deficit in January widened the most in over 4.5 years. The deficit, which is, of course, the gap between exports and imports, rose by as much as 65% from a year ago to $16.3 billion. Exports rose 9%, bolstered by Indian shipments of engineering goods and organic and inorganic chemicals. Petroleum and crude oil imports continued to inflate India's import bill, though, which went up by over 25%. Let's shift our focus to the commodities space now. Jayesh Khilnani joins us with all the details there. Crude continues to be in focus, Jayesh. The rally continues.
Morning, Alex. That's right. The rally actually continues for crude oil. But mind you, it's only for WTI that we are seeing the rally. WTI overnight surged to the highest level in over a week now and gained more than 1% overnight. Now, this is on the back of some news coming in, wherein we got that the Saudi energy minister has said that OPEC will soon discuss with Russia a new way to measure the oil inventory data that we get on a weekly basis. So that's a positive coming about for oil prices. Moving on to the precious metal space, gold and silver actually are trading flat, but gold has stabilized above the 1350 mark. There are some concerns on the Fed rate hike pace that we are going to see. So that's the reason we are seeing some bit of flat trade come about for the precious metal space. Moving on to the base metal space, the index itself closed higher for the fourth consecutive session. Aluminium was the only base metal which declined on LME, and it posted its first drop in 4 sessions. Now, this is on the back of some inventory data which surged towards the biggest weekly expansion in over 12 years now. As far as other base metals are concerned, nickel was the top performer, gained more than 1.5%. Copper, zinc and tin closed marginally higher on the London Metal Exchange. As Darshan was mentioning that due to a holiday in Shanghai, we are not getting any cues from the commodity space over there.
Well, thanks for that, Jayesh. Now, after one of India's biggest banking frauds came to light on Wednesday, the focus is now on who takes the blame. PNB said that efforts are on to protect the financial interests of all the banks involved. Investigative agencies on their part have begun cracking the whip, and political parties have wasted no time in joining the blame game. Vishwanath Nair sums up all the key developments so far in this report.
5 major developments sort of took place over the course of the day because of what happened with the Punjab National Bank. Earlier, the MD and CEO of Punjab National Bank conducted a press conference where he said that they will be paying out any bona fide commitments to any bank who is involved in the system. Nobody knows what this bona fide commitment actually means, but that is something that will come up later. The second point that came up was that there was a blame game between Punjab National Bank and the other banks involved, where Punjab National Bank claimed that it will not have any liabilities, while the other banks claimed that all liabilities lie on Punjab National Bank and they are supposed to pay them out. The third important development that took place was raids conducted by the Enforcement Directorate. So they raided multiple locations over the course of the day of properties and offices owned by Nirav Modi and some other parties involved in this case, and they found a number of things, a large amount of money, about 5,100 crore worth of gems and jewelry from his office. That is what the Enforcement Directorate has said from its Twitter handle. Apart from that, the next thing that sort of played out was a lookout notice by the Central Bureau of Investigation. You see, over the course of the day, we came to know that Nirav Modi and 3 other people involved in this case, including his wife, his younger brother, as well as Mehul Choksi, have all left the country. They've all moved out to other places. So there is a lookout notice issued by the Central Bureau of Investigations against them. The fifth and the most important point that came out was a blame game between 2 political parties. As we know, Congress has been blaming the BJP for not acting soon enough, while BJP saying that Congress was probably sleeping on the wheel between 2011 and 14 when this whole scam sort of took place.
Vishy also tells us who will pay for all of this.
There is a blame game and there is sort of a ball being passed around, wherein Punjab National Bank says that it will only honor bona fide commitments. Now, according to the bank, there are investigations going on. The investigations will reveal the amount of money that Punjab National Bank should be paying these banks. while the banks on their part have been claiming that, they gave out this credit to people on the basis of an LOU, letter of undertaking, that was issued by Punjab National Bank. It was a legitimate piece of paper. It was a legitimate message that came from a bank branch. Which is why they gave out the money, and that now the bank is liable as and when the amount matures. As such, what we know from our sources is that banks have already placed requests with the Punjab National Bank to pay them out. At this point in time, Punjab National Bank is saying that we will wait for the investigation to get over.
Well, those are the updates so far on the case, but who exactly is the man at the center of the $1.8 billion banking fraud? That's Nirav Modi. Have a look. Onto the stock of the day now, and Prakash Industries will be in focus ahead of its fundraising plans. Nikki Murchandani joins us with all the details that you have to watch out for there. Nikki, what do you have for us?
Well, Brokerage is expected to raise fund to the tune of 234 odd crore by the issue of convertible warrants to its promoter. It will issue around 1.12 crore to its promoter at a price of 208 per warrant. That sums to the worth of, it's going to be a 1 crore warrant that they're going to be issuing at a price of 200 each for rupees 208 crore. And also additionally, it's going to be issuing a 12.5 lakh warrant to the shareholders to raise an additional 26 crore. The company is expected to augment working capital and other, is raising this fund to augment working capital and other long-term needs. This is definitely a positive development for the company because promoters are looking to up their stake. At presently, promoters hold nearly 41% stake in the company, while the public shareholding stands at a good 59.24%. Also do remember the fact that ACE investors are already invested into this counter makes this bit a little interesting because Jhunjhunwala holds a good 1.64 stake in this company, while Mukul Agarwal holds another 1.51. In terms of the financial, it's a pretty picture for the company. For the 9 months ended, we've seen the revenue up 31%. Operating profit is more than 100% jump on 9-month basis, year-on-year basis that we've seen for the company. Profits have also jumped multifold for this company. It has been reducing debt. It has reduced a good 160 crore for the 9-month ended December 2017 and is confident of being a debt-free company by another 2 years. That's that in terms of the stock of the day.
Thanks so much for that, Nikki. On to the stocks in news now. Shraddha Babla has an entire list to tell you about. Morning, Shraddha.
Morning, Alex. Yes, a huge list. To start off with, IDBI Bank, which has sold 30% stake in NSDLE governance infrastructure. So the approval for this had come in December, but they've gone ahead and sold it. Mahindra & Mahindra, where the company will invest 176 crores in Zoomcar India, and with that they will be acquiring about 16% stake or so. You have Union Bank, which has shared an update and said that their exposure to the PNB fraud case is at $300 million. That's close to 1900 crores, but they say that the bank was fully secured and are confident to receive the payment. You also have Bloomberg yesterday, which shared the exposure of Allahabad Bank, which is said to be at about 4000 crores in the PNB fraud case. The other part, you have 8K Miles, which has launched a proprietary blockchain platform. Indoco Remedies, which has received a European good manufacturing practices certification for the Goa facility, so marginal positive for that company. Future Consumer, they will raise 200 crores from UK-based CDC Group via non-convertible debentures. You have a PTI report which says that Bhushan Steel and Bhushan Power Resolution Professionals may meet creditors today to evaluate bids, so there could be some developments on that front. And on the back of bulk deals, we are tracking Praxis Home Retail. That's one where Akash Pansali's Adi Financial Advisors has bought 6.2 lakh shares in a bulk deal yesterday. And you also have City Union Bank, where Lavender Investments has sold 0.9% stake yesterday. As of 31st December, they were holding 1.05% stake. So it's a near exit as far as that investor is concerned. So those are the stocks to track.
Thanks so much for that, Shraddha. Clearly, a lot of stocks that you have to watch out for today. But here's a very interesting story that we have here, an update in the automobile space. Union Minister for Road Transport and Highways, Nitin Gadkari, has ruled out the need for a specific electric vehicles policy for India. His comments come at a time when automakers want the government to come up with a clear plan for electric vehicles. The CEO of Niti Aayog, Amitabh Kant, has concurred. Kant said that technological innovations are taking place in the automobile sector irrespective of a policy. He added that the government is making an action plan on EVs, which will be given to all the ministries. Listen in.
अभी क्या बाकी रहा? जो साहब ने किया अभी सब ओपन हो गया, अभी कोई पॉलिसी की जरूरत नहीं। देखिए ऐसा है एक्शंस चाहिए। हमने जैसे स्टार्टअप की किया था, पॉलिसी नहीं बनाई थी, हमने सारे एक्शन प्लान बना दिया। एक्शन प्लान बना के हर मिनिस्ट्री अपना एक्शन कार्रवाई करना शुरू कर दिया और हम लोग ओवरऑल उसको मॉनिटर कर रहे हैं। पॉलिसी की ऐसी कोई ज़रूरत है ही नहीं।
But at the recently concluded Auto Expo in Greater Noida, a lot of the automakers that we spoke to said that there was in fact need for an electric vehicle policy. Here are some of those comments.
We thought it was a very courageous statement to go fully to 100% by 2030, because even highly developed, and with highly developed I mean not the typical definition, but the electricity definition, highly developed electric markets are not taking up such courageous statements.
Right.
For us, the concern is simply we need to understand better in form of a policy, what is the government thinking, what are their plans? And with that, I mean specifically, what are their plans where the energy will come from?
Right.
Can this energy be cleaner, and it should be cleaner than the existing vehicles, which at the moment it is not.
Right.
You still have challenges with the production of electricity in this market specifically. Then the other issue actually for us is an environmental concern.
Yes.
What happens with the batteries? Where is the concept for recycling?
What are the speed breakers in electric vehicle? I think three, according to me. First is the cost. Cost of battery is high. It is not affordable as of now. Second is range anxiety. People should know how long it can drive, etc. And third is charging infrastructure.
But the move to not have a specific policy got a thumbs up from R.C. Bhargav, the chairman of India's largest car maker, Maruti Suzuki. Here's what he had to say.
More important than policy is an action plan. I think in India, in most areas, we need action rather than things written on paper, because policy is all paper. So more important, therefore, would be an action plan which is implemented. So I agree with the minister's approach and Amitabh Kant's approach that we should have an action plan and implement that action plan.
Well, the online payment space in India is heating up. India's largest digital payments platform, Paytm, accused new entrant WhatsApp of subverting guidelines laid down by the National Payment Corporation of India. They are doing this, according to Paytm founder Vijay Shekhar Sharma, by running what he calls a walled garden service. What that essentially means is that if you're a WhatsApp payments user, you can currently only transfer or receive funds from another WhatsApp payments user. And the UPI framework that it runs on is supposed to facilitate completely interoperable transactions. Well, Sharma did speak to Bloomberg Quint last night, and here's some of what he said.
If you want to build a UPI system, you must have an ability to send money to an Aadhaar-linked account, an Aadhaar number. You must have an ability to receive money, send money, and pay to anybody, agnostic of that customer is on your platform or not. And you must have login password, authentication, securities, all sorts of things. All this is totally not there when you look at WhatsApp product. When I looked at WhatsApp product, it is flawless and smooth, except that it is exactly because you're violating every other obligation. We wish we could do that because we were asked not to let this happen. So here it is. What I'm trying to say is Facebook, with its tricks to continue to trick countries, is tricking us again, and it is doing things It is doing things which are not supposed to be the way they are supposed to be. I mean, the problem here is that Facebook must not do things which it did in internet, access pay, in the payments way. It should live by, abide by all the regulation, all the suggestions that are there, all the guidances that are there in the country.
Well, he also said several other things, and that entire interview is available on the website bloombergquint.com. You should check it out. But let's turn to the big brokerage calls of the day, and Somit Sarkar has a couple of them to tell you about. Somit, what do you have for us?
Good morning, Alex. On the big brokerage call, first we have is Motilal Oswal on Zee Entertainment. Now, they have maintained their buy rating on the stock with the target price of 705. Now, Zee has launched its digital app Z5. Now, this launch is a big positive for Zee as it fills one of the key positive gaps, placing the company in line with Hotstar and other top original content provider in the OTT space. Now, the company will be focusing on original content to benefit from shift towards OTT consumption. On the financial side, if you see that this app will have an additional operating cost of close to 50 to 70 crore rupees for Zee, according to the brokerage. Now, of this 50 to 70 crore rupees, 20 to 30 will be content cost, while the remaining could be marketing, promotion and acquisition cost. Now, this will impact the EBITDA margins of Zee by close to 80 to 100 basis points. However, for over a longer period of time, if you see, Zee's EPS is expected to grow at a compounded annual growth rate of 24% over FY18 to FY20, and the return on invested capital is expected to be over 30%. Second, we have is Credit Suisse on Apollo Hospitals. They have upgraded the stock to outperform from neutral and have raised the target price to 1,450 from 1,075. Now, they have raised the rating on the back of 4 reasons. They're expecting the margins have bottomed out for mature hospitals. Their main Chennai hospital is at a low utilization of 53%. Now, brokerage is expecting the startup losses at Navi Mumbai hospital to reduce starting next quarter, and the stent pricing impact is expected to moderate next year as Apollo reprices the insurance contracts. Lastly, the brokerage is expecting the EBITDA to show a strong CAGR growth of around 20% over FY18 to 20.
Thanks so much for that, Somit. Now, there are several stories that we've already spoken about, and you can find the entire stories on the website bloombergquint.com. But here are a couple more that you should consider reading. First up, a growing number of economists expect the Federal Reserve to step up the pace of its interest rate increases this year. That's after congressional passage of a $300 billion government spending package that is seen lifting U.S. economic growth and inflation. The Supreme Court on Thursday ordered that financial institutions holding pledged shares of Fortis Healthcare are free to sell them, even as Japan's Daiichi Sankyo is looking to prevent the Singh brothers from selling assets to enforce its 3,500 crore rupee arbitral award. And Edwin Wong, the Chief Investment Officer of Hong Kong headquartered SSG Capital Management, sees a multitude of opportunities in India as the nation pushes ahead with a bankruptcy system overhaul. Well, that's all we have time for on this edition of Daybreak, but all you need to know is up next, so do stay tuned. Thanks for watching. This is Bloomberg Quint.